Good morning, everybody. It's Monday, October 28th, 5:25 a.m. Central Time. Grain markets are lower this morning. December corn futures down 1.25 at 414. November soybeans down 6.5 at 981.25. December Chicago wheat down 1.5 at 567.5. December Kansas City wheat down 0.75 cents at 571.25. December spring wheat is down 2.5 at 602.75. Let's start off with this pipeline story.
So, a law on South Dakota's ballot could determine the future of Summit Carbon Solutions pipeline. Next week, South Dakota voters will vote on Referred Law 21. A vote for the law would allow counties to impose a surcharge on certain pipeline companies. Those surcharges would then be distributed as tax relief to each property owner impacted where the pipeline is built. A vote to repeal the law would restore authority to local communities. Many farmers and ranchers have labeled the law as deceitful and say it's a buyout to build through their land. One of the top complaints regarding the law is that it does not address the use of eminent domain, a top issue for those opposing the law. Even if the law is repealed, Summit intends to reapply for a permit in South Dakota and proceed with efforts to construct the pipeline.
Election day will be a big day for Summit. The pipeline is very important, or South Dakota is very important to the pipeline, rather. Whole bunch of stuff going on in that state. Here's a quote from this article that I thought was extremely interesting and sums up a lot of what's going on here. This is from former South Dakota Ag Secretary Walt Bones. He said this: "If we can add value to our 800 million bushels of corn, the potential impact is massive." There's two key words there: if and potential. When it comes to the pipeline, you know a few things. There's going to be some eminent domain abuse, perhaps, some safety issues, perhaps. Those are things that I think are known. What's unknown is the benefit to the farmer. How exactly does the farmer benefit from this? Exactly, precisely. How many cents per bushel? How many dollars per acre? How does the farmer benefit from this? We don't know that because the government has dragged its ass on this whole thing, and we haven't seen 45Z guidance. So while the ethanol companies and the pipeline companies and people who are proponents of the pipeline can say, hey, this is going to benefit farmers in a lot of different ways, tell me how. Show me the mathematics. Show me a spreadsheet where I can punch in my numbers and show me exactly how much more money I'm going to make or will receive per bushel or per acre of corn. And they can't do that. So you're betting on like a lot of unknowns here. The White House is in Washington in general is in gridlock and probably will be until January. So I don't know that you can expect any sort of guidance here anytime soon. So if I'm a voter in South Dakota, knowing what I just told you, am I a fan of this? Probably not. Probably not until I know more. Tell me how much you're going to pay me for running this thing in my backyard. Tell me what it's worth. And a lot of people are going to say no regardless. But, I mean, they've got a tough battle to fight given the extreme lack of details here. I know there have been ideas thrown out, but nobody knows. And that's the big problem, I think.
Rains will return to the U.S. Corn Belt this week. Accumulated rainfall is slated to begin on Wednesday and Thursday in areas of Kansas, Missouri, Iowa, and Wisconsin. More widespread rainfall is likely during the 5 to 10 day period. USDA reported last week that 76% of U.S. corn growing areas were experiencing drought, the highest level since 2012. Corn and soybean harvest has been very fast amid extremely dry conditions. Government forecasts suggest no improvement to levels on the Mississippi River through November 11th.
By the time these rains come back, and I know there were some rains late last week and over the weekend, but they were pretty minimal. I think most of corn and soybean harvest is going to be done. A lot of guys are going to be totally done. Corn harvest was 65% done through last Sunday. Soybean harvest was 81% done through last Sunday. And those numbers will be drastically higher when we see them this afternoon. The government has not projected any increase to the river levels, although I feel like they don't use the rainfall forecasts very much based on what I've observed here the last 2 or 3 years. So we're at restrictive levels, and that's part of the reason you guys have all heard about the Gulf basis. It's a big part of the reason that Gulf basis is strong. Just the cost to transport corn, soybeans, anything from the Illinois River to the Gulf is drastically more expensive because the river levels are low, because there's restrictions and that sort of thing. So the rains will be very welcome when and if they do come back. I know the forecasts can be wrong, but this stuff looks fairly convincing. You're going to see some rain. It's just a question of coverage and amounts and totals, that sort of thing.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of last week's premium videos?
Paul Neiffer was on Thursday and told us everything he knows about the Farm Act, which is an act that is being considered in Congress, I guess, that would result in direct payments to growers of corn, soybeans, wheat, and a number of other crops. This video about broke our servers because it's had more views than any video we've done over the last 2 years, I think. So this is extremely interesting. Are you going to get paid? And if so, how much? If you want to see this video, sign up for the premium deal this morning. Jim Urio was on Friday. Fantastic conversation about inflation and how all roads, all government policy maps probably lead to greater inflation in the future. And what are the implications of that? Why does the Fed actually want to see inflation? This is a must-watch video. It's not grain market specific or grain marketing specific, but if you're trying to figure out things like borrowing costs and land values and what to invest in, really, really great stuff from Jim. He's fantastic. If you want to see the premium stuff, go to standardgrain.com this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation, nobody to try to sell you anything else. You can sign up on your phone. It's a piece of cake. So if you guys are busy, if you're in the combine, you're in the truck, it takes like 30 seconds to do on your phone. We do Apple Pay, Google Pay, credit card. If you sign up this morning, I will forward you a copy of this morning's email. It includes the Farm Act video with Paul. It includes the inflation video with Jim, our 6 most recent videos, all of my cash grain marketing recommendations. As I mentioned in the past, we just want to sell you a newsletter. We don't want to do your brokerage business. We don't even want to talk to you. We just want to send you our info for $50 a month, and that's it. So check that deal out this morning, guys.
Crude oil futures have traded sharply lower to begin the week. The December 24 WTI contract gapped lower on last night's open and trades nearly $4 per barrel lower early this morning. Weekend Israeli attacks, in line with the requests of the Biden administration, avoided key Iranian oil, nuclear, and civilian infrastructure. Iran did not immediately respond to the attacks, but said the country's oil industry was functioning normally.
So I guess, given this gap lower and this sharp sell-off in crude this morning, I guess the trade had assumed that there would be some strikes on Iranian oil facilities, and there were not. So crude is acting very poorly, back below $70. This thing peaked, December WTI peaked at just below $78 in early October, and we've seen a pretty sharp sell-off since. To check in on the Bloomberg Commodity Index, we had a 3 or 4 week winning streak intact, and now we've just been sideways for a few weeks. So the commodity markets as a whole, as they're viewed through this index, which is 30% energies, 23% grains, 15% industrial metals, 19% precious metals, 7% softs, 5% livestock. It's just sideways to lower. It's been stuck in a range for a long time.
USDA reported a couple of flash sales on Friday. U.S. exporters sold 4 million bushels of soybeans to China for delivery during the current marketing year, and exporters also sold 5 million bushels of corn to Mexico for delivery during the current marketing year. U.S. corn export sales for the current marketing year are running 34% ahead of last year's pace, while USDA has projected a year-over-year increase of only 1.4%.
So some more small flash sales. We had these charts on Friday. I'll show them to you again. So the book of soybean export sales for the current marketing year is the 4th worst of the last 10 years. We're probably a little bit behind the pace needed to hit USDA projections. Corn sales have been fantastic. We're the 3rd best of the last 10 years. The only 2 years that were better of the last 10 years were 2020 and 2021. Both of those were associated with substantial Chinese buying, and we've been able to do it this year without pretty much any Chinese buying at all. Here's the thing. Here's Mexico's corn imports over the years, and they accelerated last year, and they're supposed to be pretty high again this year. I think the trade is of the opinion largely that the Mexico corn import program will not stray very far from this USDA projection, which is 22.5 million metric tons. I think the trade believes that Mexico, to some degree, is front-loading their export program to A, take advantage of low prices, B, get ahead of some geopolitical stuff, maybe a combination of both. But I think that the idea that Mexico is front-loading the program and the import program is maybe part of the reason that the corn market hasn't acted as well as it could be acting, given this flurry of business.
The funds have trimmed their net short position in the corn market. CFTC released weekly commitment of traders data on Friday. As of Tuesday, October 22nd, large money managers were net buyers of 20,000 contracts of corn. Funds were net sellers of 18,000 contracts of soybeans and 4,000 contracts of SRW wheat on the week.
These are what I would call non-consequential net short positions that the funds are holding. They just don't care. They're kind of disinterested. When you look at the position across corn, soybeans, and wheat combined, they're net short 180,000 contracts. This is just not a position of consequence. There's no big net short that could be covered. There's no big net long that could be liquidated. They're just kind of sitting here with a neutral-ish net short position. This is not a position of consequence whereas back in July, we had a position of consequence. They covered almost all of it, that big net short that peaked at 609,000 contracts across those three commodities. But now this is just not anything to be overly excited about.
Friday's cattle on feed report indicated that the number of cattle on feed remains high. Cattle on feed as of October 1st were reported at 100% of year-ago levels, in line with pre-report estimates. Placements in September were reported at 98% of year-ago levels, 2% above pre-report estimates. Placements were likely higher than expected due to drought conditions limiting fall grazing. Because of this, a large percentage of calves and feeders marketed in sale barns have made their way into feedlots. Marketings last month came in at 102% of year-ago levels, steady with pre-report estimates. The market is likely to interpret this report as neutral and move past it quickly, as strong market fundamentals continue to provide price support.
Looks pretty neutral to me. The cattle chart looks good. You could argue that this was an upside breakout on the December live cattle chart last week. You got this trend line that kind of comes down off of the first quarter highs. We'll see if we can find some follow through here today. Outside markets here on Monday. U.S. dollars about flat. Stocks are higher, and that may have something to do with the lower crude trade. The S&P is up 35. The Dow Jones up 215. Bonds are off. Gold's down $11. Crude oil is down sharply. Again, it's down $4.42 at 67.39 last trade in the December WTI. Have a great day, guys. We'll be back on Tuesday.